So what we can see is we look at all of these large cap ETFs is over the past 3 years, we have clear outperformers, clear underperformers consistently. And with respect to the 10-year and the 20-year returns, one clear winner. What's up, you guys? Welcome back to the Average Joe Investor channel. So which large cap ETFs are the best fit for your portfolio? When we're talking about growing our money over time, growing our retirement nest egg, we have to be talking about large cap ETFs, specifically the biggest ETFs in the world. ETFs like the S&P 500 ETF, SPY, QQQ, VOO, etc. And while we know that past performance doesn't necessarily lead to future results, we should at least look at historical results over the past 3 years, 5 years, 10 years, 20 years to see, are there any consistent outperformers or, maybe more importantly, underperformers? So I went to stockanalysis.com, looked at all of the large cap ETFs, and I cataloged all of the top ETFs for each of the 3, 5, 10, 15, and 20-year returns. And in total, I came up with 23 different ETFs to test. Were there any consistent winners across all those different time frames? Any of these ETFs clearly underperformed? Don't worry, I built a spreadsheet. And I never want to waste your time, so let's dive right in. Okay, so here's the large cap ETF spreadsheet that I created, and here are the 23 ETFs that I tested. A lot of these you've heard of, maybe some of them you haven't. And you'll notice right off the bat, a lot of them are growth oriented, which makes sense because from right after 2008 through 2025, growth has won. I grabbed all these ETFs you can see right here, and if we sort them A to Z, you notice we've got one from Fidelity, one from First Trust, one from Flex Shares, 4 from Invesco. We've got how many from iShares? 9 from iShares, 1 from Schwab, 2 from SPDR, and then 4 from Vanguard. Again, when I say that there are 23 ETFs, it means that these ETFs were in the top 10 of large cap ETFs in either the 3, 5, 10, 15, or 20-year total returns when I filtered based on those numbers. We've got the assets under management, we've got the holdings, and the inception date. And we were able to test all of them over the past 3, 5, 10 or 20 years. All of the data is built out here in these individual tabs on this spreadsheet. With the assumption with all of them was that we started with a lump sum investment of $100,000 at the beginning of the period, whether it was 3, 5, 10, or 20 years. We did not make any additional contributions during that time frame. And then we looked at the end of the time frame, the total capital value, as well as any and all income earned, and then combine those for total returns. All of the price history for ETFs like QQQ were pulled from stockanalysis.com, and all of the dividend history was pulled from seekingalpha.com. And there, in full disclosure, there were a few ETFs that did not have dividend history that went all the way back to their origination date. And so when that happened, I did disclose that in the spreadsheet. This obviously could impact some of the results, especially if some of these ETFs were dividend ETFs by its very nature. However, since the data wasn't available, I disclosed it, and that could have impacted results. Okay, with each of these timeframes, like I said, we're gonna look at the total income. We're going to look at the net asset value, or the change in value of the actual $100,000 originally invested, and then the combination of these two would be the total return. So first we're going to start off by looking at the 3-year returns, then we'll combine out to the 5, 10, and the 20-year returns. Okay, so starting off with the 3-year returns, we're looking at the top results here. We got income, we've got net asset values, and again, the combination is total returns. The top 5 for the past 3 years in total performance, again, large cap ETFs, top 5 were XLG, SCHG, IWY, OEF, and VONG. All of them except for XLG and OEF were growth ETFs, as you can see. Some of the ETFs you thought might be in the top 5, like QQQ right here, ended up being number 12. And you'll notice here that some of them radically underperformed these top results. These top results were in total returns were 136 down to 132, and this one was just right outside of the top 5. And then way down here at the bottom, we had First Trust Rising Dividend Achievers, which came in at $119,000. And here's a look at the graph for the 3-year total returns from 2022 through 2024, January 2022 through December 2024. And what we'll notice here is this orange line was outperforming the majority of the time. This is IUSV, the majority of the time here. And then at the end here, it really underperformed and dropped down from being number 1 right here, and at the end, November? Down to way down here, more in the middle of the pack. The clear underperformer for the 3-year returns was in purple, which you can see it ends up right down here. This is RDVY, ended up at $120,000. But you notice that in general, a lot of these were trending together the majority of the time. Let's look at the 5-year returns. Again, we've got income, net asset value, but really what we're focused on is total returns. And you'll notice the top result here is IWY, the iShares Russell Top 200 Growth ETF at 245, followed closely by QQQ at 241, SCHD at 240, MGK at 236, and VONG at 230. And you'll notice that VONG was actually in the top results for the 3-year and the 5-year returns. And there were some radical underperformers for the past 5 years. We've got top results at 245, again, starting with $100,000, then after 5 years, total returns, versus down here, at the bottom, IUSV ended with only $159,000. That's a value ETF. That's probably why. QDEF, the Dividend Defensive Index Fund, ended at 159. There's a few down here at 174, 183, 191. The majority of these ETFs landed somewhere between 199 and 215. And another thing that's interesting here is the holdings. Now, a lot of these are market cap weighted for sure, but you'll notice that a lot of these had varying different holdings. We had 111 here, 72, 228, and then 398 right here. Here's a look at that 5-year total return chart. You'll notice here that the majority of the time we had 2 radical underperforming ETFs in this time frame. In orange down here, IUSV. And then in light blue, we had QDEF. Also in purple, which finished on in third, RDVY. The majority of these growth ETFs, though, were kind of really moving together and correlated the majority of the time. We've got the 2022 recession down here, which you can see these quality defensive ETFs actually performed pretty well. They kind of stayed flat the majority of the time here, but they were already underperforming the rest of the ETFs, and they never really climbed out of that recessionary time frame. Whereas up here, we got red was outperforming, which is QQQ, almost the entire time, ended up just being right underneath the top result, which was IWY. Okay, that's the 5-year returns. Let's take a look at the 10-year returns. We've got income, we've got net asset value, and total returns. And the top result here, by far, was QQQ at 513,723. So again, started with $100,000. 10 years later, we're with 513,723. Followed in second place by IWY, then SCHG, VONG, which again was the top result in the top 5 for the 3, the 5, and the 10-year returns now. And then we've also got MGK, the Vanguard Mega Cap Growth ETF. And we've got, again, some varying levels of holdings, 102, 111, 228, 398, 72. There were a few that also finished down here at 437 and 430, which was IWF from iShares, and then the Fidelity NASDAQ Composite Index at 399 holdings and 879 holdings. Again, worst performers down here, IUSV and QDEF. And the reason why these actually made it into this review at all is that they made it in the top 5 or the top 10 with respect to the 15-year return, which we didn't actually cover here, but ended up underperforming radically the rest of the time frame. When we look at the graph for the 10-year returns, we start to see a real clear separation between the top performers and the radical underperformers. We've got down here again in red and blue the underperformers, which were at 226 and 235 in this range here, IUSV and QDEF. And then in red, we have clear outperformance by QQQ, and then in second place, IWY. And then in third and fourth place, we have VONG and SCHG. Clear outperformance here, whereas the majority of them were in the middle of the pack here, ranging from about, I don't know, $250 to $300,000, up to about $450,000. All right, lastly, as we look at the 20-year returns, we don't have access to all 23 ETFs. Only 10 of the 23 had returns going back to 2005, or a total of 20 years. And then the top result here, no doubt about it, 100% is going to be QQQ at $1.35 million. You start with 100,000, you end with $1.35 million after not adding any additional money. Then we had in second place ONEQ at 949, IWF 875, and then VUG at 855, and ILCG at 793. Worst performing here was the iShares Core S&P US Value ETF at 397. And here's a look at that graph for the 20-year returns. You can see just radical outperformance by QQQ in red, outperforming the entire time. There was really close together between 2005 and maybe, I don't know, 2012, 2013. Real separation starts in 2016, where QQQ starts to really outperform. We have the drop in COVID, and that's when things just take off for QQQ. So what's interesting here is we look across consistency, right? If we could have one ETF that outperforms in the 3-year but doesn't do well in the 5 or the 10-year, that speaks to maybe just not any real staying power for that ETF. But if we look at the top 3, 5, 10, and 20-year finishers, we'll notice that QQQ is up there in the top right here, 2, 1, and 1. However, maybe you could say that the most consistent here, besides QQQ, which finished 12th in the 3-year returns, but 2, 1, 1 in the previous 5, 10, and 20, was right here. These ETFs. We've got SCHG right here, which finished 2nd, 3rd, and 3rd, and just doesn't have a 20-year return yet, or 20-year inception history. And then we've got IWY, which finished 3, 1, and 2, also very consistent. And then we've got VONG, the Vanguard Russell 1000 Growth ETF, which finished 5, 5, and 4. Now, obviously, when we're talking about large cap ETFs, many people just choose to invest in the S&P 500, and there's nothing wrong with doing it. I also invest in the S&P 500 ETFs. But if you're looking to build a diversified portfolio, looking to incorporate some of those best performing large cap ETFs over the past 3, 5, 10, and 20 years, these are the ETFs that make the most sense. ETFs like QQQ, SCHG, VONG, IWY, etc. And then of course you also need to be mindful of the fact that there might be some overlaps between some of the holdings. If you were to just invest half your money in QQQ and SPY, for example, the NASDAQ 100 and the S&P 500, you'd find that you're radically over-concentrated in some of those top 5 to 10 ETFs. So you have to be mindful of what the actual holdings are in some of these top-performing ETFs. Is growth going to continue to outperform value in the future? I don't know. Make sure as an average Joe investor that you do your due diligence. Make sure you build a diversified portfolio. Hopefully you find some value in this video, guys. Make sure to leave your 2 cents down in the comments below. It's my goal to respond to as many of these comments as possible on the day I post a new video. And if you want access to this spreadsheet and all of the other spreadsheets I create on the channel, make sure to check out the Average Joe Investor Patreon community. There's a link down in the description below. In addition to the spreadsheets and access to a great DIY investor community, you also get access to my daily office hours with Joe, which we do every day talking about live trading my portfolio and any questions or concerns you guys have. And if you're interested, check out the link down in the description below. That's all I got for you guys. Have a great rest of your day, and thanks for watching.